Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Plug Power, ticker symbol PLUG. And so here I am recording this on Saturday, June 29th, after Plug closed the day, week, and month of June at a price of $2.33, being down a little over 5.25% on the day and actually closing at a couple pennies off of the low from the week. The low for the week was actually 231 hit on the day. So, not looking so great there. And, one thing that I did want to go over this video, which I was not actually planning on doing a plug video this weekend, or, I was thinking about it, but I was asked the question in a comment, is it time to buy plug? And so I just kind of wanted to go over my thought process with that. Plug is below $3 a share, and I had previously sold a cash secured put with a strike of 3, and it closed below 3, and so I secured a position, small position, at an average price of $2.75. And so, from that perspective, sure, yeah, I think it's time to buy plug. I do think the price is low, but I also think it could go lower. And, basically my stance is not much different from last week's video in that I think price could be testing $2.25, which was this prior low over here, hit on April 25th. And I also think it could be coming down to $2 a share if 225 does not hold. So I think that there are some better dip buying opportunities on the horizon. However, it is also possible that we have put in or are very near the bottom. So, it might be time to buy, but, I leave that up to you. And so I'll just kind of go over my thought process on whether or not I want to add to my position. And if I were to, how would I go about that? And so, here, this is the chart that I went over in last week's video. I didn't really add anything to it, I don't believe, but I did want to go over the candles from the past week because I do think that they are pretty telling whether or not price will be going down. And so what I see here, so this is Monday the 24th, Friday was the 21st over here. And so we're just looking at these 5 candles going over the trading from the past week. And so the range for the week, the low was 231 and the high was 263. And so both that high and that low were hit on Friday the 28th, where we have this massive bearish engulfing candle. It doesn't really look that good, and it actually engulfs all of the trading over the course of the week. The lowest low that we hit prior to that was hit on Monday, which was 233. So you could argue that the close for the week, it's not technically engulfing all of the trading for the week, but it definitely engulfs all of the candles. And with the low being at the same price as the close, it doesn't look that great in my opinion. Also hitting the lower low on the day. Yeah, so I feel like it looks like it's probably going to be going lower. One thing, that might stand out is volume is pretty high on Friday. Let's see, it was at volume of 121.6 million shares traded, whereas the prior high, in this time frame that we're looking at, was about 45 million, a little less than 45 million. And so we're looking at, about 3 times the amount of shares traded on the day, and we get this massive bearish engulfing candle. So, it'd be nice to see, volume coming up like this on a green day, not a bearish engulfing candle day that engulfs the entire week. So I don't think it looks that good. I think it's still coming down to 225. So, my thesis has not really changed. But then also, if we do look over at the weekly time frame, we can see this, that, maybe there's an inverted hammer candle there. Maybe that suggests that we're going to see a reversal. However, with this inverted hammer candle after this big weekly down move of nearly 13%, closing the week of June 7th, or on the day of June 7th. Then the following week, closing the week on June 14th, get this inverted hammer candle. Maybe we're going to see price turn around. But we don't see that. We just see a continuation to the downside. But the only difference really that I see is that volume is much higher. So maybe that is suggesting that we're starting to stabilize down here. We might start to turn around. Just like, over here, we saw a hammer candle that was actually, not necessarily a hammer candle, a hanging man candle, which is a bearish reversal pattern. And that's exactly what we saw. So maybe we're seeing that this is going to be turning around on the weekly time frame. But, here we saw the spinning top, nearly a doji here for the week closing on May 24th. That is also a reversal signal. So maybe, that was suggesting that we were going to reverse, but we actually went higher the following week. So, with this, I could see price going lower next week, but maybe we still start to form a bottom into next week, maybe the week after. And also with next week being a holiday week with July 4th, maybe we don't see that much volume traded and then we just, see it kind of be flat over the course of the week. So I could definitely see that. But, looking back over here on the daily time frame and just throwing my drawings back up, considering that $2 might be hit if we do break 225. What's my strategy if I were to pick up shares? And as of right now, I don't plan on it. And that's really just because I'm going on vacation in a couple weeks. And so my priorities are, saving money for going out to restaurants rather than saving money to YOLO into stocks. But, maybe after vacation, I'll look at the chart more critically. But as far as, my strategy would go if I was planning to pick up shares, I have been getting really interested in options, looking at the options table, open interest, and also thinking about picking up shares via cash secured put. And so that's what I did with Plug in getting my position with an average price of $2.75. I find that to be pretty compelling. So if we do look over at the options table here, I'm just going to expand the July 5th, and I am looking at puts here. And so actually, I'm going to take one step back to look at the chart here, that, with $2 being that price, maybe we go down to that level because options tend to be in 50-cent increments. I'm kind of curious about price going down to $2 a share. And so if I look over at the options table, and so like I said here, this is for the week closing on July 5th, and we are looking at puts here. And so the $2 strike price, there's a premium of 1 cent, which times 100 shares is $1 per contract. And so I could see that as being appealing, even though price is higher than that. If I wanted to pick up some shares, I could say, hey, I'm going to set $200 aside with this cash secured. That's what that means, setting $200 aside, because 100 shares at a strike of $2 a share, it's $200. So I'd be setting $200 aside to secure establishing a position if it closes on Friday below $2 a share. And if it doesn't, if it closes above $2 a share, then I keep that premium $1 for selling that cash secured put. And, that's great. I make $1. That's nice. But, if I were to wait for price to go down lower, that premium would go up, just like, price is about 20 cents below $2.50 right now at the closing price of $2.33. The bid or the sell price for selling that cash secured put, that premium is 21 cents, translates to $21, 21 cents times 100 shares for that strike of 250. I could pick up or I could, get paid that premium of $21, but then I'd have to put up $250, and then I'd be picking up shares effectively at $2.29. So it's $2.50 minus 21 cents. That would be the average. So $2.29. Do I think that that's a good deal? Yes, but I also think that price, like I said, could be coming down to $2 a share. So I would either wait to pick up shares at $2, maybe capitalize on that $1 premium, or, I would not do this personally. Sell a cash secured put with a strike of $2.50. And on the note of strike prices, I'm going to flip over to the Max Pain for, let's see, the week closing on June 5th. And we can see that the Max Pain is $3 a share. So I mean, maybe we do move up to $3 a share, but maybe we don't. We can always close lower than Max Pain. So, yeah, I mean, I feel like this is kind of risky, and I do think that picking up shares at $2 does seem a little bit more feasible, or, it's just a nice way to make a dollar. If we look at the following week, so I'm just going to collapse that and expand the next one. So this is for the expiration of July 12th. We can see that it's a $3 premium for a strike of $2 a share. So, maybe that's a little bit more appealing, but, if the thesis is that price is going to go down, might as well wait to see if price actually does go down to $2 a share. And if one wants to pick up shares at that price, sell a cash secured put, pick up some premium. If, it's maybe goes down to $2 a share, maybe that premium is 10 cents. That's $10 premium, a little bit nicer. Just like how here, it's about 26 cents, $26 for that strike of 250. That's a better premium to be picking up because the price is lower than that strike. And if we do go over to the Max Pain, we can see here, July 12th, that the Max Pain is 250. So it does match with that. So maybe price closes at, 251 on July 12th. So maybe this is a nice way to make 26 bucks. Maybe, the July 5th expiration, maybe that's a nice way to make 21 bucks. But I feel like, especially with July 5th coming up pretty soon, I think it's pretty likely price will be closing below 250 for July 5th. For July 12th, maybe, the dip is seen this coming week, and that is the great opportunity to pick up shares. And so, a strategy in doing this is, maybe sell one cash secured put, pick up with a strike of $2. So that's $200. Got to set that aside. Pick up $1 in premium. So that's kind of nice. If price dips lower, maybe pick up another cash secured put or sell another cash secured put, another $200. And then if price actually does dip to $2 a share, maybe on Wednesday, just before the 4th, maybe pick up some shares, at $2. Just buy them straight away without doing anything with options, because maybe there's a bounce on the 5th, price closes above $2 a share, maybe it closes at 250 on Friday, and then these cash secured puts would not be assigned, meaning one would not be establishing a position at the cost of $2 a share. So, I think that's something to consider. That's the strategy I personally would use. I would probably, if I had, let's say I had $1,000, so I could do 5 of these cash secured puts, just throwing it out there, or pick up $1,000 worth of shares. So what I would do, I'd say that I've already used some of that money with getting the position at $2.75, which that is my average 100 shares. And so what I would do is I'd probably sell one cash secured put at a strike of $2 for this coming Friday. And since, I got $1,000, I'd probably sell one at a strike of $2.50 as well, pick up that premium, and then I just add to my position. Maybe the bottom is in, maybe the bearish engulfing candle that we're seeing is a fake out. And so maybe I'd do that as well. But then I'd probably leave the rest of that cash on the side to scoop up shares straight from the market, not going into options, at $2 a share, because I think that's a good deal. But, like I said, I think it's going to be dipping down to $2.25. I think that could be happening over the course of the next week. And if we see that, I'd want to look for bottoming signals. And right now, I don't really see them too much because we do have this bearish engulfing candle. And again, looking on the weekly time frame, maybe we're seeing that reversal signal with this inverted hammer candle. But, it could go lower next week. And so I'd really like to see one more week of data to get an idea, because just like here, it's a spinning top, it's a doji that looks like there could be a reversal signal there. But then the next week we go higher. The week after that we go higher. And we didn't see the reversal until 2 weeks later. So I want to see one more week of data before I really start to feel comfortable that the bottom is in. I think it could go down to $2.25. I think it could test $2 a share. And so that's why I think Those cash secured puts are interesting with a $2 strike, and that's why I would also want to have some cash on the side to be able to place an order at $2 a share. Maybe we get a wick down to it. It's short-lived. That limit order's filled, and then, I'm happy I got my position average down and a little bit larger. But like I said, this is not my priority for the coming weeks. Getting ready for vacation is, so I'm not partaking. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys.